Hey, good afternoon, everyone. Welcome to Short Verticals. I'm Brett Crowther. Good to be with you again on a Thursday. Sorry I missed you last week. I had some things come up and I wasn't able to be here, and I do miss this class. You guys are some of my favorites, and so always happy to be here each and every week. We're going to follow up on what we talked about 2 weeks ago. Look at some of those trades that we had in there, discuss the overall market, what's going on there. We're going to look at some other potential setups, see how they're playing out. And I want to spend some time on the Analyze tab, make sure that we're fully immersed in that and understand it completely. So we'll get into that. But first of all, give me about 10, 15 seconds here. Let's cover some disclosures before we get into it. Do remember the options do carry a high level of risk and are not suitable for all investors. Information here is for general informational purposes only. It should not be considered individualized recommendation. Paper money is for educational purposes only. As you see me go through that, it's just for educational hypothetical situations. Short options can be assigned at any time, regardless of whether they're in, at, or out of the money. Investing does involve risk, and you can lose principal, and also past performance, not a guarantee of future results. Also, excuse me. Um, Here are your option Greek definitions and stop loss. Doesn't mean that you'll get triggered at the price of your stop. It becomes a market order, and that should cover that. So let's take a look. Let's get out there. And by the way, just want to welcome back everyone. Let's see who all we have over here. I got a lot of you in there. JP, Jim Talley, NVO, Scott Luck, Robert Bush. Speak truth. Hey, a lot more. Hey, well, welcome. Good to have you. And let me make sure I got my chat over here so I can get right in my mind's eye view so I can see what you're saying. I don't want to miss anything that you're asking me as I go along through these classes. All right. And then I want to give a shout out also to Cameron May, who is here helping out with chat. And I don't know if he's told you this. I mean, I know a lot of you like Cameron. You follow him on Cameron. By the way, follow me on X on Brett Crowther CS or Cameron May at Cameron May CS. But Cameron's going to be on sabbatical here coming up shortly, and so we're going to miss him as he's enjoying some time away. So we'll find out what he did with his time away when he gets back. But anyhow, we'll learn that later. But thank you for being there, Cameron, and helping out with the chat. All right. So as we get out here and let's analyze the overall market. In fact, let's do this. I want to bring up the SPX. Check this out. So where's the SPX going? Well, up again, up again. Now, if you recall, last time we talked, we brought up how the SPX was, in fact, let me draw a line here. The SPX at that time that we talked was like over in here. And so we drew the Fibonacci's from this low up this high, talking about, okay, if it were to bounce, because you can see it was kind of hitting its head for about a week or so up in this area. And then saying if it does bounce here, this is the ballpark down in here where it would pull back to that 38 to 61%. So that at that time, now it had not bounced, it had not started to retrace. So this was just a hypothetical. So it's not like something went wrong. It was just if this is the case, then that is what we would expect, but that was not the case. It did continue to go higher. Now, something interesting about that is the degree of this. It's almost nice to see it go a little bit softer, a little bit less of a steep climb because, stocks are like me on a treadmill, where the steeper the incline on the treadmill, the shorter my duration is on that treadmill, right? And so if you drop that incline a bit, then my duration can be extended. And a lot of times stocks are the same way. They can continue to climb a bit more if the incline is not quite so steep. And so we've seen it kind of back off a little bit, but it's still really super strong. I mean, look at how far away it is from this 50 period moving average, right? There's a long ways here. This is a time where some traders might throw on a 20 or even a 10, some even a 5 period moving average just to get an idea of where a trend might be. Some might even go in and draw some trend lines. Let's actually do some of that right now. Let me get rid of these Fibonacci's because it's still not there. In fact, let's actually activate them and just see if this continues to climb. Actually, let's move this out of the way. Let's do this so we can get rid of this box. Let's remove that, or we can just activate it and get it over here. Okay. So assuming again now, if this were the top, and again, this is hypothetical. We don't know if this is the top. Let's zoom in on this, get a little bit more closer. There we go. Be able to see clearly what we're dealing with here, right? If this is the top and this is where it does pull back, then this now in here we activate this and bring this over here, this would be the ballpark area where we'd see some support. But once again, quite low, right? I mean, we're talking about, we're up here at 7,500 all the way down to 7,000, 7,100 on the SPX. I mean, that's a significant drop. And a lot of people don't want to give up that much potential profits or, you know, whatever by the time it gets down there. And so that's where, let's go ahead and remove this. And so until we see that coming back, that, I mean, that might give us something in the future, but for right now, maybe want to look at something more like a trend line, something like this going on there. And here's where it was before, right? We talked about that change in degree. Other things we could do is add another moving average. And I mentioned, let's do simple moving average. I'm going to click on that once, going to click on that twice, 3 times a lady, right? So there's our 50. I got 2 more added here. I'm going to just change these. So I'm going to come into this one. They all default to 9. I'm going to put one as a 20 period simple moving average. And this is looking at, the past 20 days. And I'm going to change this other one. And what color was that, by the way? I didn't check. That's blue for the 20. Let's change that. Let's change that to a green, the 20. And then let's look at this one. We're going to make this a 10 period simple moving average. Let's change that maybe to a red or something, or yellow. Let's go red. Let's go pink. There we go. We just need something different so we can see it. We're going to apply these. And let me move my lines here, right here, just so we can see what those moving averages are. And so this is what I'm talking about, that, that it's really kind of obeying more that 10 right now. Even the 20 seems to be a bit off of the price action, even though that could be a potential support if, in fact, it were to pull back a bit. But even when it was dropping down, it was using that 10 as resistance. And so it wouldn't be surprising, we can see some bounces off this as it goes up. That would be the first level of support. So that's the first level to break before we get an indication that we have a weakening in the overall market. Now, I bring this up, why? Because if we're looking at the overall market, the direction it tends to go is the direction most stocks tend to go. I mean, of course, we could bring in the breadth issue and say, is it just a few stocks making this big move that are big stocks, or is it, widespread in the overall market? But generally speaking, when we see the market climbing, most stocks are going to go up. And so that would tell us, as we look for our short verticals, we're going to look for more bullish trades than we would bearish. Not to say we can't do bearish in this type of a market, but it tends to, it's like I've mentioned before, I like to cycle, I like to ride my bike, and it sure is easier riding with a tailwind than it is a headwind. It just, you get to where you're going a lot faster, a lot easier, right? And so that's why we want to look at that overall market. And something I want to show you, I thought this was interesting. Stay Gold says, hey, we need a pullback. I need a dip. You're not alone. I mean, the challenge with this is those that are not in are thinking, when can I get in? When can I get in? Right. And it just goes up another day and another day. It's just like, oh my goodness, where is that opportunity? It just seems to continue to run away. But here's the thing I thought was interesting. I'm going to do something here. I'm going to come back into our beaker and we're going to get rid of these moving averages. In fact, I'll leave that 10 on. Maybe let's get rid of the 20 to kind of clean that up. But what I want to do is do a comparison. If I type in comparison, I can select it over here from the studies. I'm just going to double click on that. And it actually just brings us up to the SPX. All right. And that's fine. I'll just use that as a default, the SPX. And I could go in there and change it by clicking on the gear. I can come in here and say, let's change that to the Dow or whatever, right? NASDAQ. I mean, we can change it to anything. But I'm just going to leave that as the SPX and apply. Now, honestly, we got the SPX compared to the SPX. It put one on one side and one on the other. And so, and one's the line. That's not what we want. What we want, though, whoops, I got to close it down before I can do anything else. What I want is I want to compare that. I thought this was interesting because typically speaking, the Dow theory would tell us that transportation should lead the overall market, right? And generally, I gotta get rid of this one. I'm sorry, I'm gonna have to go remove let's just hide that one. Okay. Let's hide this one as well. Let's get rid of the moving averages. So if you look at this, what you'll see is there actually is a strong correlation between, that transportation and the SPX, the SPX being in purple here and the candles being transportation. So you can see, generally speaking, if I zoom in on this a little bit more, you can see, when one goes up, the other one tends to go up, one goes down, the other one tends to go down. Now, there are times like in here where you do get some disagreement, right? Where transportation was going up, but the overall market was coming down. But generally speaking, we tend to see the general downtrend. At the same time, we see a downtrend, and we tend to see an uptrend on transportation when we see an uptrend on the overall market. And the idea being that if transports are doing well, then we have goods and services being delivered or in full swing, and therefore it's a sign, kind of the ground root sign of a robust economy. But now what we've seen though since late April is that the stock market, the SPX, has been climbing, but we've seen a pretty good sell-off and a dip in transportation. So the question is that indicative of maybe the future of transportation? Is this indicative that transportation has dipped down, that we're going to see the market follow, or will transportation pick back up? And it's an unknown yet. It's an unknown. We don't know exactly which one it will be. There's a little bit more to the sense of transportation should lead, therefore, it doesn't have to, but just the kind of concept is it should lead. And so that would suggest that at some point, this market should pull back at some point. So it just leaves us where? Well, it leaves us like to think about it's a bullish market and it's continuing to run, but we can put some stops in there. We can look for some pullbacks, as Stay Gold, always was mentioning. Hey, you might get that dip at some point. It's just interesting how long this has gone on without some sort of the divergence has continued for so long, right? That they haven't come back in sync with one another. So that's interesting right there. Let's go ahead and remove this. We don't need this anymore, so we're just going to remove this study. Get back to our basics on here. And let's also go back and get our moving average on there. Unhide. Let's unhide the 10 and the 50, right? Get those back in there. Okay, there we go. Good. Everyone good so far? We doing all right? Let me know in the chat. So a couple things I wanted to discuss though is looking at, a couple weeks ago we talked about the Netflix. Now Netflix is kind of fallen down, and we have one that's a trade that's expiring very quickly here. Now, ideally, it seems like when I take vacation or I'm out for what, we haven't been here in 2 weeks, right? So last time we talked was way back in here, because it's the 1st of May. So we're right here, up in here is when we last talked. And this is where I hate waiting till the next class to talk about it, because like honestly, if I can go back and kind of go through an analysis of this, like see this big candle right here? That's one of those indications, especially when we see something dive like that, very solid candle. If you see that on some good volume and stuff, even though there's still time, that's one of those indications say, okay, maybe it's time to look to cut losses and, walk away with this, right? And so there's a difference between a break like this, a very solid break, a candle where the bears pretty much opened it and drove it down and closed it too, versus one that's maybe, something more like this kind of candle over here, where it's like, yeah, the bears were in control, but they gave back some of the day. There's a complete different psychology between these two candles. And this is one that's very solid, very strong break of support. And so, but here's something I want to show you that I think is very interesting. If we go over to the Analyze tab, if I bring up the Analyze tab and I bring up Netflix, it has our positions down here. Like this is the risk profile we have actually 2 positions on this. All right. One of them expires tomorrow. Another one expires late May. And so now the late May one is kind of different because there's still, as we sit right now, there's some possibility it could come back up, but the one tomorrow there's no possibility, right? In fact, I want to show you that. And I want to actually show you from the Analyze tab how we might reassess managing this position. How does that play in the overall picture? So let's go over to that Analyze tab again. And here's the one that expires in May, and here's the legs that expire in May. Not May, well, later May, right? We got the 15th and a week later, the 22nd. And we got an 88.90 and a 90.92. Let's look at them at each leg at a time. So let me just take these off, and we're just going to simply look at the 88.90. So basically, we need it above 90 by expiration. The stock is not there at the moment, and it's probably not going to get there. And this is what I want to show you. And so again, this is the profit loss graph, and I want to just break this down for, whoa, what's going on there? That is funky. Let's try that again. There we go. Clean that up. What this tells us is over here is our profit loss, right? So this is the zero line right here. This is where it's break even. Up above here says the position is making money. Down below here just says the position is losing money. And this is the price of the stock. And so if the stock, in order to make money, we need it to go up, right? Because it's a bullish position. And if we sold the 90, then we need it above $90. That's where we make max gain right there. And that's where you see it going flat. And so basically this over here, this is max loss at 88, right? So underneath 88 is max loss, above 90 is max gain. And somewhere between that 88 and 90 is some sort of mixture of like not max loss, not max gain, right? With this being the break even right here. All right. So if the next thing I want to look at is this yellow line and this gray area in here. Now the yellow line gives us the probabilities. And so we have a probability of what is the probability of price being to the left of this at expiration or to the right of that at expiration. And here is the probability. Now what I want to do is actually grab it. Whoops, I got to get rid of my drawing tools for a second first. I want to grab this, I want to pull this over. And so if I were to pull this over and say, okay, well, what's the probability of the stock being above 90? So I moved it to 90. What's the probability of it being above 90 max gain by expiration? Well, it's about 5.93%. Not very likely. There's a chance. You're saying there's a chance, but there's not much of a chance, right? 93%, 94, 93% chance it'll be below that. Now, what about the possibility the stock could make that move? You know, what's the likely run? And that's what this lighter gray area is. This is showing us the range the stock is expected to move with a one standard deviation, you know, with a kind of a typical one standard deviation move. That's the range that it expects to move. And so if we look at that, we'll realize it's not even expected with its typical day-to-day movement. It's not even expected to get up above even 89. And so what am I saying? I'm saying there's really no hope for it, right? I mean, this is such a long shot. So why do I show you this? Well, one, I wanted to show you how we can manage positions. So instead of taking this one off, I left it on. I thought, here, let's walk through it. Let's discuss, you know, a different way besides just looking at the chart, besides just, you know, looking at support and resistance, but can we bring probabilities into that, see how those probabilities are shaping up, and if they might help give us a different picture, give us a little more clarity to what's going on with that position and possible actions to take. So hopefully you see from this one, there's not a lot. There's not a lot we can do. One of the best. Okay, all right. Thanks, Speak Truth and Wacky Whack says, hey, you can draw with a mechanical lead pencil or get a slice of pizza. If you are older, staying short and vertical is the way. I like it. I like it. Okay, watch this. What we're going to do now, though, is we're going to take off this one, and I'm going to click on the boxes down here to bring up our other one, the May 22nd one. All right. Now, what I need to do is up here, we always have to double check this calendar date up here. This should match the expiration, which it did on the May 15th. So the Saturday after that, right? The Saturday after the 15th is when it expires technically. And so but this didn't update when I switched it to 22nd. So I want to come in here and just move it to the day after the 22nd. And what you'll see here is it's a little different scenario on this one. All right. Let's again grab this, move it over. What is the probability of max gain? Well, it's a little bit better, not much better, but a little bit better, but about 12% of hitting max gain. So not great. And if we move it to break even, what's the probability of break even? Well, 15%. So really not strong. If we look at the potential range on this one, it looks like there is potential to get back to break even. You know, there's a range is expected to move with a one standard deviation move. You know, the typical movement day to day, that's where it's expected to go. Now, I want to stress this can change. Like if it has a good bullish day, this whole thing would shift to the right. And it gives us a different thing. But as it sits right now, that this is the expected move, and it's not looking real strong for that. And so with that said, maybe we go ahead and, you know, close that one out because it's just getting to be a long shot. Even though we still have time, it's getting to be a long shot, and we go ahead and pull that one off, and I'll go do that a little bit later. Looks like, hey, by the way, it looks like we got a survey that came up. Please, you know, fill out that survey. I do read over all of them. Actually, as a manager here, I have to read them all. So I do read what you say, and I appreciate the feedback that you all provide is very valuable to us. So please fill that out. But anyhow, so hopefully this helps us understand, you know, what our position. Oops, don't want that. What our position is looking like with the probability factor. You know, how are we sitting? All right. So let's do this now. Let's go out. Let's go back to the charts and let's. Thank you, Wacky Whack. Appreciate you getting that done. Let's look over a couple stocks. I thought there's some really interesting charts out there. I really did. Let's take a look at a couple of them, shall we? Let's go to JP Morgan. Oh, come on, JP Morgan. What's going on here? Now, this is obviously one we've done a trade on before. This one turned out pretty good when we did that one, but we're going to remove all this and look at this again as this stock had, let's give some more space in here to see what's going on with this. I'm going to zoom in. So we, hold on a second. I think I got everything cleared. I don't show anything on my side that is there. We should be good. Yeah. I mean, there's some trend lines and stuff in there, but all I have is the Fibonacci's. In fact, let me clear this off to just kind of show it a little more clearly. How's that? So there we go. This is what we see on this is support down here, right? There's where it bounced. This is resistance up here. And then it's come back. There's a couple of things that's kind of interesting in this one. This one gapped right here, and that should have been a little support level, and it wasn't, right? You can see price action came back down and broke through that. But there's some additional support and resistance areas, you know, coming from back here. And I want to throw in some Fibonacci's to actually see where that kind of that pullback, that 1/3 to 2/3 retracement, which is kind of considered a typically healthy, quote unquote, right, retracement, is. I always laugh at that because I never felt like when my account got smaller that it was a healthy, you know, it was healthy for my account. But let's go ahead and draw these from that support up to resistance. And this is the ballpark that we're looking for the bounce right in here. And where is stock? Well, it's right there. And it seems to be holding that 50. Now, here's the challenge with teaching a class at, you know, my time, Mountain Time, is 12 o'clock. It's 12:20. Eastern, that's 2:20, right? Everyone says the world revolves around Eastern time. I'd argue differently, but hey, whatever. It's not at the end of the day, and so we don't know exactly where this is going to set up or end. And I'd like to see a little bit more of a bounce versus a spinning top. However, this is a potential trade, but I wanted to actually take this a step further and do something I think is going to be interesting on this position. I actually want to go out there and place two trades. I want to place one where we're going to use kind of the support level down here at around 300 as a support and play that. I also want to put one a little bit deeper down here that's lower. And I want to use that to compare and contrast how those two positions are playing out next week when we get together. All right. So we can see the impact of the time decay, the impact of the stock movement, you know, all that delta gamma theta stuff. So let's go ahead and do that. So I'm going to come over to the trade tab and let me delete this. All right, we got JP Morgan up here. If we're looking at our time frame, you know, which options, you know, expiration do we want? Typically looking for that ballpark about 30 to 40 days, you know, tends to be a sweet spot. And as a default, it's not bad to look at the not the weeklies, but the typical Friday expiration. Why? Well, because generally speaking, they tend to have the tightest bid-ask spreads. There tends to be the most volume there. And so we can get a little bit better feels on that. All right. Not always the case, but it just generally is. Let's see. Oh, these have widened out quite a bit since, oh my goodness, what? Of course. Of course. I don't know what happens on Thursdays. I tell you what, it blows my mind. All right, so what I have here is you may have in these columns, you know, the delta, gamma, theta, vega. You know, it's very common to have. Where is it? It's I think it's this. No, it's this one with the Greeks. Well, what I did is I just came to this one right here, and I just went in and went to options, theoretical, and Greeks, and it was delta, right? And I could use delta for that probability, but I think it's easier to understand if we just talk instead of like inverting the delta to get our probability. I just coming in and say, what's the probability of out of the money? So this is the probability that this strike will be out of the money. And then selling a short spread, that's what we want, right? We want it to be out of the money. And so let's go with something that's kind of a higher probability. Well, if we get this, yeah, we'll probably be okay. Like we can go something down in here. I'm going to go kind of even deeper than I thought. I want to go something like the 74% probability of out of the money. So it's a pretty good probability. What kind of credit are we going to receive from that on that 285, 280? Well, let's check it out. So I'm going to click on the sell of the 285. I'm going to hold down the control key and come up to the ask of the 280. So sell the 285, then come up here and buy the 280. Oh my goodness, that really dropped down. Holy cow. Well, we're going to go with this because it's going to be an example. All right, we'll put it $1 to see if we can get filled there. Um, I'm not going to worry about price, about position sizing and all that because it's not the purpose of this. I want to compare and contrast these two trades. So this is the one that is kind of like, further out of the money, has a much higher probability of success versus the other trade that we're going to place in just a moment here. But the credit is not very high, right? We got a $1 credit on that. And so let's go ahead and confirm and send that one. Check and see if there's anything in there. No red flags or anything stepping up there. It says we can make $100. We could lose 400. That 400 being the difference between the two strikes, right? We sell at 285. If it goes down, we're losing money. It caps out at 280, so that's a $5 difference. So we have a $500 potential loss, but we keep the $1, so the $100, and so that's a $400 potential loss is what that's saying. So let's go ahead and send that. All right. Stegel says JPM looks weak even with all the market upside. Yeah, I'm right there with you. Actually, I picked that for a reason because it's not so strong. Because I want to use that and show how this might play out, right? So hang tight with that. All right, and we'll look at some others. We'll get through this one pretty quick because we're going to look at several others that technically are stronger. But I didn't want one that just like runs. I want something that maybe chops around. So the next one we're going to put on is we're going to go something with a lower probability. And so this one, we have 50. The 300 has a 51%, so it's still technically a higher probability trade. I want to go something with a lower probability trade, like a 305, 300. So that's only going to be a 43% chance of being out of the money. And so let's do this. Let's click on, we're going to sell the 305. And now, oh, come on, where did it all go? Let's scroll down here. Good grief. By the way, this always throws me off because I don't usually have my Thinkorswim font this large. And so when I usually click on it, I can still see it, but I make it larger for the class. But then what happens is it gets hidden because everything is so much larger when I actually click on things. All right, so as I mentioned, clicking on the bid of the 305, I'm going to hold down the control key and click on the ask of the 300. So we got a 300, 305. Now look at the difference here. Oh, let's move it back to that 250. Just hold it there at 250 because that'll make numbers nice and easy. So the risk on this, much higher credit, right? 2.5 times the credit of the other one. But the probability is a lot lower on this one. The risk on this one is also a lot lower because we still have a $5 wide spread, but this time if we're receiving a $250 credit, well, $5 minus 250 or $2.50 is again $2.50, right? So it's a lower risk in that sense, but it's also a lower probability. But again, I want to compare and contrast these two, so I'm going to send that one off. And so stick with me as we look at these next week and see. I got to make sure those get filled. Those wider bid spreads that popped up, kind of taking a toll on that. But we'll watch those. Okay. All right. It's going to be interesting as we get in and we look at the Analyze tab on the JP Morgan and we start looking at. Let me come in here. Where's our other trade? It looks like the one got filled. Looks like this one got filled. This is the wait, 305, 310. That's not. I can get that one filled. Get rid of that. We could actually. Is it not? It's not populating. Yeah, it is. Let's get rid of this. It hasn't filled yet, and so it's not quite populating the way I want to show it. And I could reconstruct it and show it, but we're going to look at those next week, and we'll kind of walk through those. All right, but there's so many others I want to get to, so let's get out there. Let's look at Oracle. Oracle. Now, we just got done looking at that JP Morgan, and it's kind of going sideways. Really hadn't had a solid balance, right? But the JP Morgan or Oracle here is slightly different. Well, it's even more than slightly. You can see it came down, bounced off this long-term trend line, ran up, kind of hit it again, ran up, come down, hit it again, ran up, hit it again. And really, this was the high of on the downtrend. This was the high, and this was the low. Well, it broke that spot, so now it's making a higher high. From there, basically, let's go from here to here. It's making a higher high, and then from here to here, this is the next low. It came down and bounced here and ran up. So this is a higher low. And so now, actually, even though this looks like it's been in a downtrend for a long time, this is setting up to be the beginning potentially of an uptrend. You know, now with that, I gotta get rid of my drawing tools, don't I? So you can see it had been a downtrend, but this is, people often say, hey, I want to catch this when it rolls around. We get something new here, catch it being of a trend. Well, we don't know at this point when it's down in here that it's going to be a bullish trend. But once it starts making higher highs, which it had, and higher lows, this is where we're starting to see it. So it is only recently when it broke above this level that's making now a new higher high, and it's kind of officially the uptrend. And we just bounced off that same spot today. So this one gives us a lot cleaner, from a technical perspective, a lot cleaner look. All right. Let me go ahead and remove these. And by the way, here's our Fibonacci's. You can see this one did come down, bounced right off that 50%, right? Boom, right there. And off it went. Let's remove this stuff as to not confuse us. But text note. So there we go. How about that, huh? All right, let's go ahead and see. What are we at? About 187 on that bounce. Let's go ahead and see what this is offering us today. So I'm going to go over to the trade tab. And because I already have it linked, by the way, that makes it so quick and easy. I actually like to link everything. If you come in here, you can see, click on that. I have it on red. So I have that on red. I have my watch list over here on red. And then I have the trade tab, this on red. I have the analyze tab, this on red. And so basically what happens is anything I put in here, if I put PG in there, PG is already on the analyze tab. PG is already on the trade tab. PG is already on the charts, right? It just keeps them all together. So Staggold, now we're talking with I knew you'd have a different flavor with that with Oracle. But anyhow, it just makes it real quick and easy so I don't have to worry, am I getting the right symbol and everything? It's just all tied together. So let's going back to the trade tab. Again, let's go out to that June, 35 days out, not bad. Kind of in that sweet spot there as far as it gives us a good opportunity to find something. Sometimes depending on when we're looking to get in, it's either like one's too short, the other one's kind of a little too long and stuff. But this one happens to be right there in that window. All right, looking at this, let's go with the higher probability. So we can either sell, go with a 53% or maybe in a 57. It's kind of changed a little bit since I looked at it earlier. It always does. It always changes on me, but let's try this. Let's go with the 57% probability of being out of the money. So a little bit higher than a 50-50 here. I'm going to go ahead and sell the 185. And then, we're going to bring in 1080, but we're going to use some of that to buy protection at the 180. So I'm going to click on that. And that's going to give us a $1.92 credit. Let's bring it to a $1.90, make that kind of nice and even there. A $1.90 credit. Now, what's the risk on this one? Well, again, 5 wide strike. So it's $5 of risk minus the $1.90 is going to give us what? What is that? 310? 5 minus, $3, right? 5, or not $3. 5 minus $1.90 is $3.10. Okay, so that's our risk. And so on that, if we're going to risk $1,000 on this trade, if we divide that by $310 per contract, that's going to say we could do 3.2. Well, we can't do a point, so we're going to just do 3 contracts. So we're going to get 3 contracts in here, and we're good to go limit. We're going to go ahead and hit confirm and send. So with that, if we're getting that $1.90 or $190 per contract, and we have 3 of them, that's going to give us a potential gain of $570. But then if we lose that 310 and we do that 3 times, that's going to give us a potential loss of $930. All right. And just to check that risk reward, by the way, let's go ahead and send this off. That one just got filled. Yeah. Okay. 190 divided by 310. I'm looking to be a little bit above, at least this is a lot of times looking for about 30%, but the reason this one's so high at 61% is because we're only looking at about a 50, a delta that's in the high 50s, right? If we were looking at a delta that's closer to maybe 70, then we'd probably see this closer to about 30%. And so I hear people say, always look to get this kind of a risk reward, on that. And that's good if you're saying this also should be the delta. But when you change that delta or you change that probability, meaning if you have a much lower probability, then like in this case, a 57% probability, but we'd hope that the risk reward is going to be a lot better than, because we're taking on more risk, right? So we want to get compensated for that additional risk. And so it's not just a one size fits all. We have to be kind of fluid in saying, okay, well, if I'm going to take more risk, I want to get more money out of it. If I'm going to get a higher probability or less risk, then we're probably not going to get as much money out of it, right? Got to be able to be flexible that way. All right. So we'll keep an eye on that one. Let's go through some charts and see what else we can come up with, right? This one, we got Citigroup here. Citigroup was also, I mean, this has kind of been in a long-term uptrend as it runs up, pulls back, runs up, pulls back. And so it's kind of in this long-term bull flag in a way, right? Like we got the flag pull right here. Then we got the flag itself doing this kind of a number. So waiting for it to bounce up. And this is kind of that classical run up, pull back, pull back 1/3 to half. Um, we really don't want to see our flag dripping down too much. Obviously, you see a flag that's as long as a flagpole, there's something wrong there, right? That's not a well-constructed flag at all, or it's too short of a pole, one or the other. But nonetheless, this was coming back and it was up a little bit more this morning. Let's zoom in on this. We can see it's just a little bit better. It's because it's a little bit small. Now we've kind of assessed the big picture on it. But hopefully, I mean, this again, this is a general spot where we should see a bounce potentially. And so we're going to keep an eye on that, watching for that. And so let's keep that in mind for next week. It was bouncing a little bit earlier, but now it's pulling back. And that's kind of the thing about waiting till the end of the day is, at the end of the day, you get a more clear indication of how it's going to end up. Are the bulls going to run this into the sunset, or are they going to give up short of that? So it's always nice, but hey, you know what? We're confined to the times of the class, therefore, that's what we have to do. Newmont Mining, NEM. Check this out. So I think this is interesting. So we have kind of some different patterns going on here. And I don't know if you guys see anything in there. Do you see anything of interest? I'm gonna get a different drawing tool for this one. Get a different color. So how about this? It comes down, it goes up, it comes down, it goes up, it comes down, it goes up. What do we see there? Anyone? And by the way, there is that survey. Yeah, thank you for posting that again. Sure appreciate that, Bree. Yeah, so fill out that survey again. But what do we have here? How about a shoulder, a head, and a shoulder? We got an inverted head and shoulders here. And so it looks like it's bouncing out and potentially retesting. Now, this is right where it's at a flux right here. I mean, this is where we'd be looking for a potential bounce in this spot and moving up from that old resistance, hopefully being new support. It hasn't bounced yet. Yeah, you got it, David. Inverse head and shoulders. Yep, Kevin. You guys were saying it just takes a minute to speak truth. Yeah, for it to find a populate in the chat. Just a little bit ahead of us time-wise. This is a little slight delay on that chat. So this is the distance right here that we'd expect it to go on the breakout. Now, some will also, a more conservative target is the right shoulder. So this is another spot. So let's go ahead and utilize those as potential targets. So let's grab our drawing tools. We're going to drag a straight line. We'll pull, that's not pulling it down, is it? We're going to draw a line from the head to the resistance and also another one from the right shoulder to resistance. And I'm going to duplicate this one and pull that out. And assuming it bounces here, this would be the target, right? That would be an initial short-term quick target. But ideally, we're looking for it to run this distance here up in there on the 147. All right. So we'll keep an eye on that. Now I'd like to go place a trade on this, but I don't want to do it just yet because it's not officially bouncing, right? It's kind of pulled back to support. But here's the deal. We won't talk again till next Thursday. And so between now and next Thursday, there's a good chance that it could potentially bounce here. And if it does, then, maybe I'll go place a trade in between, right? You can do that. Lower highs, no, still making, I mean, the highs are all kind of, if you're just looking at highs, they're all kind of equal. And you could actually make another argument for a different pattern. In fact, let me show you this. We could also say there's resistance here and there's resistance here or support here, and the stock itself ran up, pulled back, ran up, pulled back, ran up, you know, looking to be a potential double bottom that could possibly break out. And so some might wait for this spot to break out and then run this distance here, which is what, about the 108 to the 122 or so. So what is that going to be? About $14. So it's going to put us about around 136. So there's another potential play in there, depending on, which one you want to, a little more aggressive on the head and shoulders, maybe a little bit less aggressive on the double bottom, but there's some ways to look at that. Okay. Oops, gotta get rid of that. Get back on my chat. You could place a conditional order. We could. Now that's a great question that came up. Is could we place a conditional order on that? We could. One of the challenges, especially with options, is we don't know exactly what price we're going to get with that. We could say when price action. I could go in there and say, hey, when price action breaks above, like 121, go ahead and enter into the short vertical. The challenge with that is, what is the probability of out of the money going to be? What kind of credit are we going to receive? And we just don't know. It's going to depend on, again, how many days to expiration, what the volatility is looking like, what exact, well, we could know the price at that point, but there's these variables that we can kind of get a ballpark, but it makes it a little bit challenging. So sometimes it might work actually better, instead of saying, okay, set a conditional order, is to actually create an alert. All right. So maybe we just come down here and do create alert and say, okay, go ahead and let us know when this one, we can do mark or last, is at or above. I'm actually going to put 119 in here. Just say when we're, up above this area. Let's do 120 when it's up there. Then go ahead and let us know. Now I have it set up with, I better not show if it has all my email and mobile in there, but you can set it up to say, hey, send me a text or send me, an email. Go ahead and let me know, or just, give me a signal here. But we can create that alert that will ping us and let us know when that happens. Okay, maybe one or two more, and then we got to wrap this up. Oh my goodness. Oh, KDP. KDP was interesting. KDP, this one had a long-term resistance. There it goes. It finally populated. Long-term resistance right here. And oh man, it's giving it back. Earlier today, it was rallying and looking like it was going to possibly break to that long-term resistance. And then, the fact that it broke out before and came back might give a little bit of hesitancy to catch the breakout. So if it does break out, maybe we place half a position on the breakout. And then once it comes back and bounces, add the other half of the position, right? But that's one that could be popping up. And then let's do NEE. And NEE just slowly climbing up and doing its thing, right? Sitting there at support, possibly looking for a rally, bounce off this, and slowly working its way up. We don't need that channel anymore. Okay, so lots of different stocks out there. BRK, last one. We're gonna get BRK. Oh, what am I missing? BRKB. Let's do OXY. Boy, better get it's all in there. OXY coming back. This one found 50% as a support after that long run, bounced up, came back, bouncing again. Now this one could potentially be forming either a diagonal like this, potentially, and it could potentially be breaking out of that. So that's one way to look to get in that soon, is if it breaks above that resistance right in there, okay? Or just waiting for it to either even move higher off of a double bottom in this area. So we can see got a lot going on in there, don't we? But hopefully you can see the double bottom right there and right there, where price action was coming back and bouncing in between here, 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 and then looking for it to go up and break through that. So several stocks to keep an eye on. So we got a lot going on, right? A lot to look at, a lot to keep an eye on. And we have our trades that we're going to follow up on. The one that we placed for educational purposes on Netflix, and then the other one as an actual paper trade on Oracle, to follow through on and see how that one performs ultimately. Do remember to fill out that survey, and we're going to wrap it up because we've covered all the stuff we need to cover, and we're short on time. But again, it's been good being back with you. Thank you so much for, I mean this. Thank you so much for taking time out of your day to join us. Sure appreciate it. And by the way, if you're not a subscriber to our YouTube channel, please take a moment, subscribe, and please like the class. It just helps it get more exposure, helps our algorithms, and just help us continue to bring you these classes. So best of luck to everyone over the next week. Cameron, thanks again for handling the chat. I'll look forward to seeing you all right here, same place, next Thursday. Till then, take care.